financial markets are so short term. We need to think long term. If that would change, everything would change.
Hi there. Welcome to the Circumcenter, a series of stimulating dialogues on the circular economy. Today's topic is finance and investment to channel funds into sustainable initiatives and startups. According to research, investments in environmental, social and governance areas increased by almost 74% from 2016 to 2020. Chatham House estimates that more than $1.3 billion is invested in the circular economy annually. However, this is still a tiny number compared to the larger linear economy. Sustainable investment has been a passion for someone long before it was a topic for most businesses and investors. Meet Reto Ringger. He founded the first sustainability index, which later became Dow Jones Sustainability Index, and the world's first sustainable asset management company. Reto is the CEO of Globalance, a Swiss private bank. Through its Globalance Footprint, it becomes the first bank in the world to show its clients the impact of their investments on the economy, society, and the environment. Let's hear it from Reto about the role of financial markets in sustainable development and in the systemic change we seek. Hi Reto, welcome to the Circumcenter. Let me begin with our first circle, which will focus on your personal life. So my first question is, when you think about your past, what was the most important event in your life that made you who you are today?
I think that was when I became an entrepreneur. It took me 26 years until I really knew what I would like to do out of my life. And I was always searching, and I did not really find something that attracted me. And then I wrote a business plan for a company called Sustainable Asset Management, because I wanted to combine sustainability with asset management. Was lucky to find investors. That was back in the mid of 90s. And then we were looking for offices, and then I was sitting on that desk first day and really could start, your dream and your vision. And I think that's when I realized, hey, that's what I want.
What is the story which led you towards sustainable investments?
I have an economics degree from my university background, and I was working for banks. I was working at the stock exchange, and the stock exchange really fascinated me. The trading, the fast development, the prices, the dynamics of the markets. And on the other side, I always was interested in nature, in holistic thinking, in Kubernetes thinking. I wanted to combine that. But the banks I worked for, they did not care about this. It was so clear for me that this has to come together because, this whole sustainability, environmental and climate thing was, in my assessment, you already had the World Business Council of Development that had the conference in 92. So it was really on the radar if you had an open eye and an open ear. And I thought of it as a big business opportunity. And it was my passion to combine this, let's say, nature. I came more from the ESG, from the environmental side. And also intellectually, it really inspired me to find solutions and to convince people to invest sustainably.
Can you tell us about the idea behind Dow Jones Sustainability Index?
Yeah, that's really interesting. That, in 1997, we could convince Dow Jones to do with us a sustainability index. And you have to imagine, Dow Jones is the owner of the Wall Street Journal. That's the most capitalistic newspaper. And they do a sustainability index 30 years ago. That was really pioneering. The trigger was that we had a problem. And the problem was that the market did not believe in sustainability investing. Our objective was really to convince the financial markets, right? So to convince investors. And they ignored it a bit at the very beginning because it was not in their turf and it was too early and so on. But what happened is that the corporates, they woke up because they were measured against sustainability. So McDonald's, General Electric, ABB, all those companies suddenly were measured and we gave them rankings. And on the logo, there was also Dow Jones. So they took it very, very serious. So I think we influenced them, and we triggered a process that they started to building up, because they were looking where are our peers. And from that sense, it had impact. And today, still 30 years later, if a company is number one, the Dow Jones Sustainability Index, they make a press release and they announce it, and they're proud. And some companies really also aligns their payment structures, their performance compensation for top management to the membership of the index. So that was a side effect that we did not expect to develop out of it.
Now we're moving into the second circle of our conversation, which will focus on the finance sector and your business. My first question is, what is Globalance Footprint?
What we want to convey to the investment world and to our customers that they have an impact with their investments. Many people are not aware that they are influencing the world with their investments. And so they have a footprint. So the footprint methodology works that the higher the number is, the better your footprint is, right? Because we want to create positive change, and the footprint is being measured. What is your impact on 3 dimensions? So what is your impact on the environment, on society, and what is your impact on the economy? So we came up with criteria for every one of those 3 sectors. And then we have clear criteria, how we measure that, and that's how we come to the, to the score then.
How does Globalance World Map help investors make conscious decisions?
I mean, this world map we created really to visualize the impact, right? And we worked together with a design company, and they told us that you have to read the data, but you also have to feel the data. And then we had the idea of creating this globe, because everybody is using Google Map and they know they are used to it, and it's very emotional, right? So you have places where you have been, where you would like to see, what's my impact there, and so on. So that was the basic idea behind it, and then we filled it up with data, and I mean, it was really a very fascinating intellectual job to do that. And then it was very interesting to see the reaction of the market. Like with the Dow Jones Index, it seems that we have an impact, because what happens now is, let's say, I give you an example, there's a big pension fund here in Switzerland, and they have uploaded their portfolio in the tool and saw that they have a climate degree which is way beyond what they expected. And what did they do? They went to their banks and told them, look, I mean, this is not what we want, you have to improve, get better. So, I mean, this tool is really having an impact also on a wider scale, and I think that's really great.
How do you convince investors to consider long-term impact over short-term profits?
Yeah, that's the mother of all questions, right? Because at the end, we as human beings, we are short-term. But on the other side, 52% of our customer base is female. This is really a high number for a bank, right? So it seems that, female investors are more open to that. Maybe we're more interesting for younger people that, have children, that are looking for the next generation. So I think we're in the midst of a change of values also. I'm not saying people are becoming long-term, but it's changing. And if we can demonstrate that you can also deliver financial return with that concept, I think that's the best, proof we can do that people understand, this is also from a financial perspective, this is the right thing to do.
How do you define impact in sustainable investments?
I mean, there's a bit of confusion in the market about sustainable investments. And if I do presentations, I always use a concept from psychology to describe the market. And this concept describes that you have to go through 4 rooms if you have to solve a problem. So it's called the 4 rooms of change. So the first room is the room of happiness. So you just fell in love, everything is great, no problems, just perfect, right? And then your friend comes to you, your wife, your husband tells you, things are not going too well. We should change a couple of things. I'm not so happy anymore. And then you are in the room of denial. Okay, and then you do not change things in the room of denial because you deny the problem. Your friend has left you because now you really face the problem and you cannot deny anymore. And now you're in the room of confusion. And in that room of confusion, you have to develop then the solution. And that's the fourth room, that you are in the room of solution. And if you look at the issue of sustainability, our parents have been in the room of happiness, resources, energy, everything was, cheap, free. And then those scientists came up and told us, hey, be careful, right? We denied, we ignored. And I think, and there are still a couple of people in the room of denial today, but most of the people are in the room of confusion now. Because the task is really challenging. Everybody has a different opinion. A regulator comes to the playing field. Politics come, consumers, technology. It's really confusing for investors, and I think it will stay confusing for us for a couple of years. I think that's our role, to really help investors find their way in that confusing room, help them with understand, what can they do in terms of sustainable investing, because you also can be too much focused and then you give up diversification or returns. It's really a difficult task, and I think that's really the job for a company that claims themselves to make sustainable investing, to find solutions for investors that would like to combine investment returns, but also sustainable development.
Where do you draw the line to avoid falling into business as usual?
I think we don't do a lot of investments, maybe that traditional investors still do. So we don't invest in fossil fuels. So we have, exclusions when it comes to certain sectors and so on. But especially recently, there came up very new questions where we have to find answers. So one question, as an example, is whether Microsoft is a producer of weapons. Because more and more weapons, it's not hardware, it's software. And Microsoft and also other IT, companies are a big supplier of services to Pentagon. So they're creating weapons with that software, right? So is it now a software producer or not? Because on one side, you don't want to have weapons in your portfolio, and then suddenly such questions come up. So, that's part of our daily business, that we have to reflect about those questions. And sometimes we don't have the answer, but we still have to engage with them. And I think that's really great, because it makes us better as a company also.
This is the end of our business circle, and now we're moving into our third and final circle, which is going to focus on your thoughts on the future. My question is, what do you see in the future of sustainable investments?
I think we're in a very interesting phase right now. I'm in that field close to 30 years, but now it's really taking off. Not only negative with greenwashing, but also positive. There's a lot of money flowing into that sector. A lot of people are being hired to do analysis, to understand the topics. There's a shortage of ESG analysts and ESG portfolio managers, and there are more regulations coming. This is good, but this is also bad on some elements, because it kills a bit innovation. Many smart people are now entering, this field. So they're not going anymore to the hedge funds. They're going to the sustainable investing field, which is a great thing. So I think things are changing. Still, we have to become more long-term, but maybe that's then the next phase, that we have to think about, okay, how can we, change our pension structures to become more long-term, because we have also this demographic challenge, independent of, let's say, more the environmental sustainability. There was a book from the World Business Council in '92 called Financing Change. And that's really the role of financial markets, financing change, right? I think we have a huge challenge, but on the other side, we also have more and more people trying to work on solutions.
What needs to change in the finance sector to create the most significant environmental impact for the future?
I think it's very simple. We need to think long term. If that would change, everything would change. I give you an example. Some time ago, we had a very large pension fund from the UK did issue a request for a proposal for an investment strategy for 20 years. So it was a virtual request, but they went to the market and was asking for an investment portfolio that could be invested for 20 years, right? So usually when a pension fund goes out, the proposal has to be for, let's say, an investment horizon of 3 years. And so we were participating in that competition and realized that we had to think completely different, because whether you have a time horizon of 3 years or of 20 years makes a huge difference. Because if you only can invest for 3 years and then you have to be, liquid and you have to deliver a return in 3 years, that's limiting your, let's say, your creativity, your options. Whereas if you have 20 years, we came with very innovative solutions. And a lot of them were in alignment with sustainable development. And so I think the answer to your question is we should think long term. And then a new horizon would open up and we would find new solutions.
What would you first advise brands and businesses who want to transform their production towards a circular economy?
I think the most important thing is to understand where do we have impact, positive or negative, with our production, with our products. I think to create a plan and create a vision, how can we change that? And maybe be a bit too ambitious to stretch your goals, to inspire, your team and maybe also some customers and some suppliers, because you need them. And then I think it's really about also challenging yourself, because I think what we need to understand is everything that we will have to do in that solution room will be outside our comfort zone. This is outside our comfort zone because we have to leave our comfort zone. Otherwise, we will not be able to, let's say, find solutions, because the solutions have to be very different from what you know. So we cannot be 5% more efficient or 10%. No way. We really have to think very, very differently. That's something we should be aware of and really challenge ourselves also to find good solutions.
And this concludes our conversation. Thank you so much for sharing your story with us, Reto.
Yeah, thank you. It was my pleasure. Thank you very much.
Thank you for watching. We hope this conversation inspired you to start your circularity journey today. So please subscribe to our YouTube channel and hit the bell button not to miss the future dialogues with passionate leaders in the circular economy. If you enjoyed this conversation, you could listen to the whole interview on Spotify or Apple Podcasts from the link below. See you at the next Circumcenter episode, discovering the center of your decisions.